Hi, everyone, this is Rob Roy, and welcome to the Hub Financial Crypto Show. First show of 2025. Happy New Year, everyone. We will be talking all things crypto with Mr. Brandon Burton here in just a moment. But before we get to Brandon, I wanted to talk a little bit about the markets because there's a couple of things that are interesting in the equities and bond markets, and I'm interested to get Brandon's take on how that, if at all, applies in the crypto world. So if we take a look at the chart of the S&P, you can see that we're in this little corridor of support here, support resistance, if you will. We did have a little bit of a concern, which may or may not still apply, but head and shoulders pattern here, left shoulder, head, right shoulder. Now, every now and then, doesn't happen a lot, but every now and then you get what a lot of people will call a humpback head and shoulders, where you have a test here, and we're testing that right shoulder, and now we're moving down and we're testing the neckline of support. If we can break above this line, then we should be off and running on a move to the upside in the equities market. If we break below that, because we do have a pretty strong Fibonacci support level here at the wave 4, then all bets are off as far as how far down we could go. You'd look at 50% and then 61.8%. And so that's the concern in the equities market. But what's creating this, if you're wondering why is the equities market acting so squirrely, first of all, we had a big run after the election with anticipation of a growth friendly administration coming in. But we also have some concerns about what could happen from an inflationary standpoint. There was a report from the Washington Post yesterday that said, President-elect Trump's going to be a little more targeted than people think in his tariffs. And that put a bid under the market. And then President-elect Trump came out and said, nope, that's not true. That's fake news. And so we reversed and down we went. So just when it looked like we were going to break to the upside, we went back down. So even though the Fed has cut rates and is viewed to be in an easing cycle, although I think it's more of a pause cycle right now, they've even cautioned that don't expect any more rate cuts anytime soon, maybe 2 more, but they'll be towards the end of the year. And you can see with what's going on with the 20-year Treasury here, we're moving all the way to the downside here. Remember, prices and yields move inversely. So as prices are coming down, yields and rates are going up. So why are rates going up so significantly when the Fed is at least in a pausing cycle, if not an easing cycle? So a lot of stuff to talk about as far as what's going on in the bond and equities market. And I did want to get Brandon's take on, again, how that applies in the world of crypto, if at all. So without further ado, let's bring him in. The foremost expert on crypto, in my opinion, Mr. Brandon Burton. Happy New Year to you. Brandon, how are you today?
Man, great holidays. Hopefully you had a good holidays. It's been a good year so far.
So far, so good. Yeah. But yeah, stress over the holidays, as we chatted about before we came on. So I'll save all the viewers all that stuff. But moving house during the holidays is a little challenging.
Yeah.
But, other than that,
you told me, yeah.
I'm absolutely excited, though, about the year ahead. I think there's going to be volatility in the equities markets. I'm curious to hear what you think about what's going to happen in the crypto world. You, in our last recording, talked about with Bitcoin breaking above 100,000 and getting up, that maybe that's not the best place to chase it. Wait for a pullback. And we've had that. So once again, you're starting off the year pretty spot on with your forecast. So look forward to hearing what you have to say today.
Yeah, Bitcoin is one of those things. It's more of a like an education long term. We gotta educate. There's a lot of the population that still doesn't know really what Bitcoin is or why they need to have it and why they should trust Bitcoin. But I show this chart quite a bit. I mean, this is a chart of housing prices and Bitcoin prices. Now, if you were in 2016, a house would have cost you $288,000. In 2020, that moved up to about 328, and last year, I guess 2024 now, 435,000. So almost a double on your housing cost in just 8 years. Now, what does that translates to? People essentially losing faith in the dollar. I mean, some people want to call it inflation. Some people want to call it rising house costs. But all it, at the end of the day, equates to is people don't believe the dollar is worth as much as it was 8 years ago. And that's simple to see, right? You can see that with the cost of eggs, with the cost of produce, with the cost of anything you go and buy. people don't believe the dollar is worth much. They believe their physical things. They believe this camera lens is worth more today than it was 8 years ago. But Bitcoin, the inverse story is a little bit truer. In 2016, you could buy a house for 664 Bitcoin. In 2020, only 45 Bitcoin. And 2024, at 6 measly Bitcoin to buy a house. Now, obviously, in all of history, we've never had an asset that appreciated as quickly as Bitcoin, but people are getting to be more and more believers that Bitcoin is holding its value and it's at a rapid rate. But the problem is right now, as we see Bitcoin cresting at 100,000, pulling in and out, pulling back and forth, there's a struggle. There's a struggle between people wanting to buy Bitcoin in the background and new retail investors learning for the very first time about Bitcoin, which is why you see these big pullbacks like we did even this last week. People FOMO. And FOMO, for you guys that don't know, is fear of missing out. So they try to jump into Bitcoin with a thing they call leverage because they didn't buy it at 90,000. So now it's 100,000. They're like, well, how can I buy more Bitcoin? Like I would have bought at 90,000. I know I'll just borrow some Bitcoin against my Bitcoin and I'll use 2x leverage, 3x leverage, 4x leverage. In crypto, you can go up to 150x leverage very easily. And you can't do that in the TradFi market. So things move very quickly. So when you see swings like you do in Bitcoin right now, it's because people are FOMOing in to leverage and they're getting knocked out because the big traders in the background can see that leverage and see those market lines and be able to retrace and pull that Bitcoin back to a price where they can accumulate big dollar amounts. But don't be concerned. Crypto's headed where it needs to head this year, and we can talk about that in a second, Rob. But the other thing that I want to talk about, just because we've been alluding to it for months, is, and there's some big changes coming up here, and I don't want your audience here to miss out on this, is the Jupyter platform. Jupyter has been one of those things that launched this last year. If you held the token and you voted on all the votes in Jupyter, and I know that's kind of complicated to understand, if you voted on all the votes in the Jupyter platform as a governance token, you basically made 100% on your money just by holding the token. And without it going up or anything, you basically doubled the amount of tokens in your wallet. It's like a free stock split, but the price of the Jupyter remained the same, and that's actually a little bit higher. Now, Jupyter, if you show my screen here, this is the Jupyter platform. It's a decentralized trading platform. A lot of people know what Coinbase is. They know what Kraken is, but a lot of people don't still know what decentralized trading platforms are. And that's what Jupyter is. It lets you connect with a decentralized wallet. You go and you swap tokens for whatever you want here, and that is the Jupyter platform. And the reason I bring this up is I still think, and if you guys go ahead and follow us over at Digital Investor, go ahead and sign up for our thing. We'll explain exactly what Jupyter is and how you can benefit from this next year. But we think starting right now, Jupyter is going to be the play this year. But there's going to be a timing thing on getting into this bad boy. But this is definitely one of those picks and shovels plays. Like, when you were back in the 1900s, the guys that bought the railroads were the guys that did really well. So this is the exact same equivalent. People might be trading Bitcoin or Ethereum or Solana and hoping the price goes up. But what about the platforms, the decentralized platforms where all that stuff happens? So that's what we're putting our thought processes into right now, and Jupyter's one of those platforms. But I know you had a couple of questions, Rob. What were you thinking about when you're seeing all these crazy machinations in the market right now?
Yeah, and first of all, I got to commend you on that analogy on talking about inflation with how much it costs to buy a home, and with inflation going up, but yet with an appreciation of Bitcoin, if you had Bitcoin, it would be inverse. And that's one of the primary reasons that those that foresaw, I wasn't one of them. You converted me. I am a crypto fan now, but I wasn't in the early days. And it took me a while. Old dog takes the time to teach an old dog new tricks. But I thought that was a great analogy. But a lot of people did see the fact that Bitcoin crypto is a way to offset the burgeoning debt that we have, and there's a big fear, and I think that's what the bond market is worried about right now. On President-elect Trump's coming in, yes, there's going to be pro-growth policies, there's going to be deregulation, all that, but he's also talking about some crazy amount of spending and the tariffs, and so there's a further concern about that importing inflation. Where's the money going to come from? Every single day we go by, there's a 30-year bond auction today, and we're talking about getting awfully close to 5% on the interest rates on the 2-year, and then the 10-year is possibly there. That's a number that's going to scare a lot of people if we hit that level. So where's all this money going to come from is the concern. And all of this, every bit of it, does devalue the dollar, especially when the Federal Reserve can authorize the Treasury to print as much money as they want. And as we are in an easing cycle, that adds to it, right? That makes it even worse. And so there's a heck of a balancing act going on. Where's the most stable place to be? It does seem that crypto is the place to be. So the questions that I had for you, first of all, this concern about the bond market, and it's really wild right now with what's going on in the bond market. And if I could ask Ryan to put my chart up here of the TLT again that I showed a bit earlier, just talking about this is not how the bond market normally moves. The bond market usually is kind of slow and quiet, kind of sideways. It'll move up a little bit, down a little bit. The directional moves tend to be slower in duration. In this point, to see these kind of vertical moves in the bond market shows that there's a lot of concern going on there. So with all of this volatility that's going on in the bond market, is there any direct effect in the crypto world to what's going on with interest rates in the bond market? I know the relationship with the dollar. You've been very clear on that, and the benefits of having crypto over worrying about the dollar, the devaluation of the dollar. I think we're perilously close. I didn't think we would be this close this soon. I thought maybe somewhere down the road. But with the amount of debt that we're incurring, man, if some of these other countries get together and decide to have an alternative currency that attracts enough people, and with the debt at dangerous levels, like, I'm not sure how we can service the debt right now is where we are. Anyway, back to my question is, does any of this directly affect crypto from a day-to-day basis, or is it just the generalization of this is exactly why you want to be looking at Bitcoin and crypto because of all this stuff that's going on in an ancillary basis? But from a direct basis, day to day, is there an effect?
No, you hit the nail on the head with the latter one, right? So basically, it's this long term is going to do exactly what I incidentally showed right at the start, right? In that picture that you put up right at the start, that one right there. I mean, this is exactly it. People are losing faith in the system. They know if the Fed can print an unlimited amount of money, why is it going to hold any value other than what people believe it to be valuable enough for, right? So as people lose faith in the system, they're going to lose faith in the dollar because it's an infinite supply. If they can see that they're printing $1 trillion to help out Ukraine, then money just devalues itself and the people lose faith in it. But what you can't lose faith in is something that has a finite supply. 21 million Bitcoin will never have more printed, and it can't. And so people are starting to realize that. And so in the long term, you're just going to see this trend right here on this chart continue. And so even though the bonds right now, like you said, if you show that again, like even though you see that bond chart right there, that's a huge drop for the bond market. Just like you said, that's very not anything that I've seen in the bond market before at all, do like anything like that. And so when you see that, that's people having, I think, more fear in the market than we've seen in a long time because they're losing faith in a legacy system that is starting to break down.
Yeah, and one of the things that I've learned over time, and I know there's people that when we do the YouTube show over on Elliott Wave Options, they have been saying, oh, though the bond market is wrong, the equities market is right. My experience over 27 years is that you never discount what the bond market's telling you. It's larger than the equities market. There's a viewpoint that a lot of very smart traders are actually on the bond side. When you see something like this, it grabs your attention. I can't get to the point where the bond market is wrong. It's still a big concern, and it's just becoming more and more of a concern as we go through what's occurring. And I can switch the chart over to the TNX real quick while we're up on the screen, because that's the 20-year. And then if we go to the shorter end, and we know that we've had an inverted yield curve, we haven't quite had the recession yet, but the inverted yield curve. But here's even the 10-year. Now, the 10-year on TNX, this is yields. So the TLT was prices, so TNX is yield. So there's the yields going up as the same thing as you saw going down. So it doesn't really matter where we are on the yield curve. That's what some people try to say, it's different because of the different time frames on the yield curve. It's the same across the board, that there's massive concern going on in the bond market about where things may go. And I was doing a lot of reading over the holidays, Brandon, reading on crypto, and it is amazing now. I think no. I think people like you are starting to have an effect on the masses, just like at Elliott Wave Options. I think we've done a lot to kind of quell some of the concerns that people have that just have a vague familiarity with Elliott Wave. I think you guys are doing the same thing in the world of crypto. Because the viewpoint of those that thought, this is something really cool, and you can buy it real cheap in the beginning, and you're getting these big returns, are now starting to see it in a more serious light, not just a short-term trading vehicle, but how it could actually be the currency of choice moving forward. President-elect Trump, as you've pointed out, is a fan of this. Perhaps, somewhere deep down, he actually has a concern about what's going on with the dollar as well. And he's wanting to shore up the reserves. I think that's one way that we can keep things going for a while. But at some point, we're going to have to attack the level of debt that we have. And I don't know how we're going to be able to do that with the amount of spending. It's a spiral, right? When you start to get to servicing debt, you go further into debt to service the debt you already have. And it's going to have to be tremendous amount of spending cuts in order to create that. The only way out of it is growth. And I think the original excitement of President-elect Trump coming in is he's a pro-growth president coming in the administration. But can he engineer in 4 years enough growth to attack the debt significantly enough to make a real serious difference? I know he wants to, but man, that's a big task. I don't know. And he's got so much on his plate. He wants to stop these international conflicts, and we got the China-Taiwan thing going on. There's just, there's a lot for him to do. And I know he wants to build his legacy here because he can't run for re-election again. There's been all kinds of talks about that. But all this stuff, all these things that we're talking about, Brandon, what's the common denominator that comes back is what you said. When you have something like Bitcoin, where there's a limited amount, then it creates fiscal responsibility, right? So there's no one that can say, no, we're just going to go create a whole bunch more Bitcoin and do the same thing that we did when we went off the gold standard with the dollar. We can't do that. So it does seem to be like an endless appreciation potential in Bitcoin. And then the next question I had for you was going back to what I mentioned earlier, where the last show we did before the end of the year, you mentioned because of this move up above 100,000, you didn't think it was a time. Let's not chase it right now. Wait for a pullback. And we've had that. We broke above 100,000 again, but then we made a lower high here, and we're in this pretty good corridor of support in this area between 87.5 and just under 100,000. So my next question was, is this enough of a pullback, do you think, for people to start taking a look at it? Or do you think maybe we might get a little bit more of a pullback? If you were adding to, and I know you're trading all kind of things.
Do you want the worst answer? Sorry, I got another ding here. I guess I got to be at another appointment. But do you want the worst answer I can possibly give right now?
Sure.
It doesn't matter. It doesn't matter. You buy it right now, like we are going up with Bitcoin. I don't care. Really at the end of the day, you nailed so many things. Donald Trump is pro Bitcoin. He's going to do whatever he can to make a strategic Bitcoin reserve. If that gets announced this year, we're at $200,000 Bitcoin, right? So does it matter if you look back in December, you're sitting at 200,000 Bitcoin? Did you buy it at 94,000 or 97,000 at 100,000? It doesn't matter, right? But if you're asking as a trader, then it kind of matters. I think we're at a good point to where we could start to DCA back in. I mean, it might fall back down to 90,000 here, 85,000. It just doesn't bug me as much. Whenever I tell somebody to buy Bitcoin, it's on a 4-year look forward period. If you're buying Bitcoin today, I expect you to hold for 4 years, right?
Okay.
And so at any time you're buying Bitcoin, that's what I'm looking at for Bitcoin. And if you would have done that at any time in Bitcoin's history, you'd be up on your money. And so that's a win. That's a win. And not up on your money a little bit either. Up on your money a lot. So
Yeah.
that's how Bitcoin works. We just look at it that way. But if we're trading other things, we're going to trade a little bit differently.
Well, your answer coincides with something that I remember when I was first getting into the world of trading. And, the guys that have been here, and I'm starting to get there myself as time goes on, but guys that have been around a long time that have seen a lot and have a lot of experience. One of the rules that I read in the top 10 trading rules, I wrote it down in my own trading rule handbook, was don't get too picky on the entry. In other words, don't try to time it perfectly. If this is something that you believe in and you're talking about a 4-year time frame, don't wait and try to pick the perfect bottom. Nobody can hit the bottoms. Go ahead and get in. And that's basically what you're saying now. But I also agreed with you at the end of the year. You don't necessarily want to chase vertical moves either.
Right.
And
Yeah.
we've consolidated that. And gone sideways. So I think your answer makes a lot of sense. And the 4-year time commitment is stuff that people have to remember if they buy it and it goes down a little bit and they're like, I should have waited. Now let's see where we are in 4 years. I think to be happy with the entry that you picked when you did. So Brandon, I know you got to run. Again, it was great to start off the year with you, and I appreciate your time. And the next time we chat, we'll be talking about the inauguration around the corner, and we'll see where Bitcoin is at that point in time, and also see what's going on with the bond market. I think it's going to be crazy with that 30-year bond auction today and how things apply. But thanks again for your insights, and I look forward to talking again real soon, my friend.
Yep.
Take care, everybody.